is Mr. Kareem Harras, who is a premium client manager from the Multibank group. Okay, so Kareem is going to be talking about the top 10 trader mistakes, okay? So we need to be listening to these. Kareem will explore the trader's top 10 mistakes as he dives into the often repeated and overlooked mistakes. Moreover, Kareem will guide you through some of the main understandings of market sentiments by analyzing trading volumes that lead to predictions in price movements. I can see the slide is up, so Mr. Kareem Harras.
So, good afternoon, everyone. My name is Kareem Harras. I am the Premium Clients Manager in Multibank, and I'm a certified financial technician. And it's our pleasure to have you all here today. Let me welcome you on behalf of Multibank Group and on behalf of myself. So, this speech was supposed to be in Arabic, actually. But because the majority of you are English speakers, so we will try to deliver it in the English.
Shall we have a vote? How many people here speak Arabic? How many Arabic speakers? Everyone else English? How many English? Kareem? They want it in English.
Yeah, so you win. So we'll have the speech in English. I hope you will get some good information from it. We will not take too much time. But actually, when I chose this topic, this is one of the most important things that everyone should know. If you are existing trader, if you have the interest to trade, this one you should know, because this is the most common mistakes. So if you keep it in your mind always, if you stay having it in front of you and you avoid to make it, believe me, it will help you a lot while you are trading. So the first common mistake that every trader has, or the most of the traders, is to open the position without having these three answers. So let's say, for example, if you are going to buy gold, buy euro, buy whatever your strategy, if you are news trader, if you are technical trader, I don't care about this one. What I'm speaking about now, if you are going to open a trade, you should have an answer for these three questions. Have the third one. So when you open the trade, if I'm going to open in gold, as I told you, why I'm going to buy gold? I should have a reason. Like, I'm not going to buy gold just because I want to buy gold. I should have a reason why I'm going to buy gold. Just not to open the chart or not to open the platform and just place the trade and that's it. The other one, we should know when I'm going to open this position and for how long I'm going to stay, when I have to exit. These questions, you have to keep all of these answers in your mind while you are trading, because really it's very important. The third one, where I'm going to trade. Where is my entry levels? Where is my exit level? So if you don't have the answer for these three questions, this is one mistake. Maybe it will work one time, maybe the other time it will not work. But this is one of the most common mistakes that everyone who's trading have. So the second one is being a victim for emotions. You know, trading is an emotional game. When you open the chart, when you start trading in front of the screen with real money, everything changes. Whatever your knowledge, whatever your strategy, maybe it works with demo account, you make maybe 100 times your account, but when it comes to real money, it's an emotional game. So your emotions start to guide you. So you have to avoid being a victim for emotions, such like fear. I have a stop loss level and I see the price is going down. So because I have the fear that it will touch my stop loss level and I don't accept the loss, so I start to move my stop loss, I start to change my strategy, I start to change my trade, so I start to have mistakes. And when it touch you close the trade, maybe it will not touch your stop loss and it will go back and will come to the same direction that you was expecting. So the other one is greed. Now I have a trade, I plan to have my exit level or my take profit level at this one, at X level. So I see the prices flying, going up, start to reach my level. Oh, I don't want to have it here. I want to have more. So I start to move my take profit level. At the end, I guarantee for you 100%. When you do like that, you close your trade. Maybe break even, but mostly it will be in a loss because of greed. So you have to avoid being a victim for emotions. The uncertainty. If you don't know what is happening, you don't know what you are going to do, you are not sure enough about your trade, this is uncertainty. So it will guide you for bad trades. And there is some more emotions I didn't write here, but it's like there is one which is very famous. I believe everyone is trading who's doing this one. The revenge trade. When you lose, so I have to revenge today. I have to get back the profits. I have to get back the money I lost. So you start trade just for revenge, not for trading. So you start trading, you have more mistakes, maybe you liquidate your account, maybe you close in loss, but at the end, this is emotions. It will guide you for a loss. So one of the most important things, maybe I believe like many of traders, they forget about it, is the risk to reward ratio. Before you open any trade, you have to like plan for your trade. What is the risk to reward ratio? The minimum risk to reward has to be 1 to 2. Like if I'm going to risk with 10, so I have to take a reward of 20. Don't take 10 and I'm expecting a reward of 5. So this is not working good. Because at the end, if you do proper calculations, you will find this will guide you to a losing trades. So I have to keep in mind always the risk to reward ratio. The recommended one is to be 1 to 3. So if you are going to open a trade, when you put your stop loss level and your take profit level, it has to be 1 to 3. This is the best one. If you see the market, it's full of opportunities. Every day we have too much opportunity. But your money, if it goes away, خلاص, you will not take the opportunities. You are out. You are out of the game. So the more you try to keep your money, to reduce your risk, the more you will stay in the market, the more opportunities you can get. So we have to keep this ratio always in mind before opening any trade. So we have to answer the 3 questions. We have to keep the risk to reward. We don't have to be a victim for the emotions. So the 4th one is to trade against the trend. So this is everyone wants to do. Everyone try to be smart and try to predict when the trend will reverse, and he want to sell on top or he want to buy on the bottom, which is not correct. It's good to try to predict where is the bottom and where is the top. This is very good to try to predict it, but not to trade it, just to know what is happening in the market, to take your action. But if you trade against the trend, it's very, very bad, because whatever your amount, whatever your portfolio, whatever your level of experience, you cannot go against the market. No one can go against the market. So trend is your friend. Keep it always in your mind. Never ever trade against the trend. Like we have an example now for gold. Some people start to sell gold when it reaches 1,500. Why? Because we expect that the gold will reverse. My friend, it's going in uptrend and it's very clear. Why you go against the trend? Because I expect. And they stuck and they still trying to maintain their accounts by putting more money. They try to do anything, but they never accept the loss and they want to go always. This is a greed as well. So it's not only against the trend, this is some emotions. Your greed is moving you because you want to take the full trend. Why don't you take a small opportunity with the trend? Why not? You make 5%, you make 2%, it's fair enough. You know, in this market, like if we do a proper calculations, if you do 30% per year, this is perfect. There are some funds, they don't make these amounts. But with retail traders, with small traders, you can make 30% in a month. But you have to do it properly. You have to avoid your emotions. You have to avoid these mistakes we are speaking about. So we have also the proper money management. Poor money management. If you have a poor money management, you'll never be able to have at the end, after you do the math, to have a profitable trading account. If you don't have a proper money management, you'll not be able to do anything. This is one of the most important things, is to have a proper money management, like to know the leverage. This is a leverage market. All of you know that. This is a leverage market and it's high risky. So if you don't know, like I see someone has a trading account with 5,000 and try to open 3 lots, 4 lots. How come? You have to do the calculations. You have to do how much, you have to know how much you are leveraging your account. For example, if I have one lot of 100K and my portfolio is 10K, so I have a leverage of 1 to 10. 10 times I'm leveraging my account, which means the 1% loss equals 10% loss from my account. So if I do the proper money management, I know what is the leverage level, what is the position size I have to take, so it will help a lot. So the other one is the profits, as we were speaking. You have to plan for your profits. Like I see everyone, some of them, like no one is putting stop loss, but some of them, they put stop loss and I never see anyone who's putting take profit level. This is rarely happen when I see someone who's putting a take profit level. They always keep the market moving, they want to get as much as they can, and at the end, it's not working. So you have to plan for everything. If you keep these points always in your mind before opening any trade, believe me, it will help you a lot while you are trading. I have 13 years of experience, sorry. I have 13 years of experience in this market. For sure, I liquidate many accounts. I trade for myself, I liquidate many accounts. But at the end, I learned I have these mistakes always in my mind. So controlling loss, we speak about this one. So what else we have? Randomness is to trade without a plan. Sometimes you feel boring. Market is working 24 hours. I just open the screen, check, click, buy, sell, lost. Start emotions, start revenge trading, start all emotions controlling you. So you will not sleep, you will have a bad day, you will have the worst day in your life. So try to plan for your trades. Plan for it. Don't trade randomly. Market execution. I believe market execution is one of the biggest dangerous things in the market. If you are executing your trades in market execution, you do market execution. It's better, or the best one, is to plan for your trade. So you have where you will go, where you will open, where you will take your profit, where you will close in a stop loss. If you do market execution, it means you don't have a plan. You open, you press, that's it. But if you have a plan, if you have a proper plan, you will know your levels, you will keep your levels, you will use the pending orders, and you will have a successful trades. Gambling. I believe let's say 70% of market traders, they love gambling, they are gamblers. Sometimes it comes to gambling. When you open, you see the prices is moving too fast. Okay, I will open the maximum I can open, and I expect it will go without any reason, because I don't have the answer for why and when and where. So I start to make gambling. At the end, it will cause a losing trades. Market orders, we speak about this one, the pending orders. You have to use the pending orders. This is a very good option. If you use it properly, if you try to make your orders always pending, don't execute market orders, it will work very well for you. So we have to put our stop loss, our take profit. Sorry for that. Mixing the time frames. This is also a big mistake. Sometimes you open the chart, you are a daily trader, okay? And you open the chart and you start to look at the 1 hour chart, 30 minutes chart. And then you take a decision based on this one. And at the end, you are a daily trader. You will keep your trades for days. So you have to know exactly your trading style. Are you a speculator? Are you a day trader? Are you a daily trader, long term, medium term, whatever? You have to know exactly what is your style. And never ever mix the time frames. If you are a daily trader, only you have to care about the daily chart. Try to deal with each chart as a totally different one. Consider the other chart is for another instrument. So if you are a daily trader, the maximum you can look for the 4 hours charts to just put your entry and exit levels. But you have to care a lot about the trend for the daily, about everything. So you have to be sure about your time frame and never mix your time frames. So we have number 9, misusing of technical indicators. Like some people, they know about technical indicators and they are using the technical indicators in the wrong way. Like let's say, for example, some indicators work only if the market is trending. And some other indicators, they work only if the market is in a range. So you have to know exactly why I'm using these indicators and how I can use it properly. So before just you hear from the market, you hear from anyone, like use the moving average crossover method, you will get good signals. But if the market is not trending, if it's ranging, it will give many, many false signals. So you have to know exactly the indicator you are using, and you have to know how to use it properly. And I believe that you cannot take buy or sell signals from indicators. This is my belief. Indicators just help, just give you more confirmation, just make you to reduce your risk, but it never gives you buying or selling signals. So the last one is to change your strategy with every loss. Like if you have a strategy and it's working for you, you trade, you feel it's very nice. So with the first big loss you take, you change your strategy, which is not correct. If you believe in your strategy, you have at least to track your strategy, let's say for 1 year. You have to see how it's working, if it's working properly or no. But don't change your strategy with every loss. So for sure, every single point, this is the top 10 mistakes we speak about. Every single point of this presentation, it has deep information, it has more information. So if you need to know more details about it, if you want to get more information, you can visit us in our booth. Thank you for listening to me, and it was my pleasure. Thanks.
Thank you, Kareem.